Day of mixed news at the Mag 7 companies as Microsoft announced more layoffs and then Tesla reported a big drop in second quarter deliveries. Nick Mersch is here, portfolio manager at Purpose Investments. He joins us to talk about all of this. Thanks for coming in.
Thanks so much for having me.
We are looking at the year to date, and Apple's down 17%. Tesla's down 26%.
That's
NVIDIA,
right.
of course, is hitting all-time highs. This gap that we're seeing amongst the Mag 7, do you think it's going to get bigger?
That's right. And I think if you look over the course of last year, what we have is the Mag 7 were really just all on fire, all in sync, and all firing on all cylinders. But now we have a massive bifurcation in those that are deemed the sort of have and have-nots in the AI sector. And I think you have a couple here that are lagging behind significantly, and they really need to pick this up. On the other hand, you have those that are very deeply diving into this and very big adopters of this technology and enablers in a big way. And I think you have to have a laser focus on this. For example, on the Microsoft front, they made a stellar partnership with OpenAI and really got ahead of this next platform shift. Yeah, they did miss mobile and they had some catching up to do. And it's very rare that these incumbents can really capture that next wave. And what we're seeing is Microsoft's ability through their superior management team really be able to capture this.
Okay, so let's talk about some of the laggers, as you mentioned, Apple being one of them. They're now going to partner with somebody else for AI because clearly they're not getting ahead, as you mentioned. What do they need to do?
Yeah, and I think that Apple, for a very long time, has really been struggling in terms of new products and the innovation front. There was a lot of these headlines a lot earlier that said the AirPods business alone had massive revenue, and that was bigger of a lot of different companies. But what they've really dropped the ball on it is developing their AI strategy themselves. And what they're trying to do now is they went back into the earlier stages and said, okay, we have to build our own AI models. We have to build our own LLM. But they saw the difficulties around that, and they saw the massive CapEx that was really being spent in these areas. And originally, it was perceived that Apple, they were skipping a lot of this CapEx, which was great for their cash flow, because they've always been a very strong free cash flow story. And people really were cheering on this earlier stages. But what we're seeing now is that they've got left behind in this front, and they're now looking to partner with some of these other model companies in terms of integrating that on the Siri front. There are also a couple of articles out in terms of the internal struggles with the AI team at Apple. So what we really need to see here is then be able to integrate with some of these companies that have spent significant time and significant capital investing in these areas and be able to really optimize that partnership. But at the end of the day, Apple is great in terms of that consumer's one endpoint, that consumer's point of connection, and a lot of data lives within that ecosystem. And maybe as we have language models move from large language models to small language models, more will get pushed to the edge in terms of the compute required. So there is a place for Apple in this ecosystem, but they sure need to find it.
Let's talk about Microsoft for a moment, because they're laying off. It's their second major round.
Yeah,
the first one was in May. Is this because they are spending so much on their AI build out that they need to cut costs, or could it be the result of AI already taking some in-house jobs?
I think that's exactly what it is. And Microsoft is really what they're doing is eating their own cooking, because they're coming out and putting forward these incredible AI models. And what they're doing is seeing a lot of efficiency in terms of the jobs that it's being able to replace. If you talk to any software engineer right now, what they're doing is interacting very deeply with an AI tool called Cursor. And what they're doing is talking to this code in plain language, and it's coming back with full code. And even if it has errors, they're going back into that. So part of this workforce reduction in terms of the 9,000 laid off, around 4% of the workforce, is mostly software engineers and then some product managers. So what we get here at the end of the day is some massive operating leverage that I think is just beginning to start in terms of what we're going to see from the productivity and the profitability side on Microsoft.
Yeah, so it's the people creating the product that then makes them obsolete from their jobs.
That's right.
Let's talk about Tesla for a moment, and I want to know if you see them as sort of outside of the core group because of really what they do and because of that connection with Elon Musk and how much his personality weighs on the stock.
Yeah, for sure. I think right now they're perceived as that outside group because they're not really participating in a lot of this kind of price action that we've seen in these other names that are directly AI linked. But when I went to GTC, NVIDIA's massive developer conference, everybody was talking about real-world AI. And if you think about the fleet of Teslas that is currently on the road right now and the amount of data that's being aggregated and inputted from all their different cameras on all the different cars on the road in terms of the amount of miles driven as well, what this builds is a massive proprietary database that if they can figure out that level of autonomy through that imaging system, then they might have a pretty big win here. But I think the number one thing here is that Elon has to get back to building. He's been way too distracted in terms of a lot of these different sort of political theatrics that he's been involved with. And not only did he recently isolate Trump, he isolated a lot of his consumers as well. You've seen a lot of these Teslas out on the road with bumper stickers saying, "I bought this before Musk started his antics," or something along those lines. And what he needs to do is get back to building and back to really innovating within these companies.
Nick, do you see other companies outside of these tech companies benefiting at this point from AI?
So I think what we're having now is a lot of the AI benefits are finally starting to ripple into other industries that are integrating this into their workflow. So if you look at Walmart, they say 65% of their US stores are going to be serviced by automated logistics by 2026. And this is going to cut unit costs 20% while still keeping some of the price levels. Now, in the short term, some of the tariffs are going to impact those margins, but over the longer term, this period of automation is going to be enormous. Another example on the cosmetic side is Sephora. They did a 30% lift in cart value when they had AI-powered recommendation engines. So by implementing a lot of these technologies in these real-world economy companies, what we're going to see is a lot of productivity enhancement really ripple throughout the system.
One of the most immediate benefits will be to the energy or utility companies as the buildup goes on. Will that carry on for some time?
Yeah, I think so. And if you think about the percentage of electricity that is required from the data centers, it's really spiking here in terms of around 3% to close to 12% on some more aggressive analyst expectations. But what we have to look at here is just how antiquated the old grid systems are and the updates that we have to make to these. And what we're seeing now is really big push on the nuclear energy front because we've realized this is clean, safe, always on, always reliable energy. And what we're doing now is really cutting a lot of the red tape. Because if you look in South Korea, and it's an important parallel because South Korea is also a democracy, and when you look over there, they're doing it at four times faster.
Rolling out nuclear?
Rolling out these new facilities. They're doing it 4 times faster or in a quarter of the time.
Yep.
And they're also doing it at a quarter of the cost. So these are incredibly achievable milestones. And what we really need to do is continue to cut the red tape around nuclear.
How are they doing it at a quarter of the cost?
So what they're doing is they're really, from a government perspective, having a lot of legislation around it that really limits all the approval processes. And if you think about the US timelines, and they recently built a reactor Vogtle, and it was drastically over budget, drastically over time. And a lot of it was just due to these red tape heavy restrictions. And as we get less restrictive there and power this forward much quicker, we're going to be able to keep these data centers rolling out.